Well, good morning, guys. It's Keith Allen, ready to dive into our weekly overview for Bitcoin here. On this analysis, we got a big green close, of course, on the weekly candle, but this is really just where the story begins. We're going to identify some potential patterns that are forming. We're going to look at liquidity in the order book, and we're going to take a look at where price could go from here. So that you can be better prepared for the upcoming week. I'm expecting some volatility. So as you can see, we did get the green close here. We did, however, not break that 0.618. Broke it for a little bit, but we didn't close above that, and that's important to me. We're going to dive into the charts now, but first I want to show you, of course, this is something I've been calling for a long time, and it played out. If you look back at the history of these analysis, we've been talking about the need to come up and test this level. And, of course, we're seeing a rejection for the moment, but that doesn't mean we're rejected for good. There's a lot of things happening that could push price back up. But the first thing I want to look at is the fact that this is not the first time that we've seen something like this. As we drill it down a little bit, you can see, price came out and visited the top of the golden pocket here back in January. We broke down, tested support, came back. Here's another retest of resistance, and what for the moment is looking like a rejection. Of course, we saw this before, right? Coming off of the 2017 high, and then breaking down into this was 2019 high, excuse me, and then breaking down. No. It was 2017 high. 2017 high here, golden fib from the macro high down to the swing low, and we did exactly the same thing that we're seeing right now. Now, that doesn't mean that we're going to break down 70%. This was the COVID crash. That was a big deal, and I'm not expecting something like that at this point. But this, in my opinion, was a healthy retest. Where we go from here, well, that's what we're going to look at. And to do that, I want to take it over here to this chart. This is the local range that we were in, right? This was like, 40 to 45K. And so I've been talking about an RS flip happening, and in order to confirm whether this is indeed an RS flip, we need to retest support and see if support holds here at 45. If not, are we going to go to the moving averages, etc.? Now, patterns I see forming here, there are a couple. Number one, you see this double top here, and double tops tend to do what we're seeing happen now. They tend to retrace a bit and then find support and then go for the next leg up, if that indeed is going to happen, or it could just be a further breakdown. So let me put on the old paintbrush here. I'm not very good at this, so pardon my bad drawing, but we do see a potential inverse head and shoulders happening. This would be the head. This would be the right shoulder, okay? And they did exactly what those patterns do. They double topped, and now potential correction. If you're not into the inverse head and shoulders, you might even say, oh, well, this looks kind of like a cup and handle. Okay, well, same thing, double top. Now we go test support. Where do we find support? And if we do find support, will we then bounce back up? That remains to be seen. That's one of the things that we're certainly watching here. So if price does break down, where are we going from here? Well, if we look at this as the local top here, and a potential retrace to mark that RS flip at 45 would be a mere 7.5%. Nothing newsworthy there. That happens all the time. Even down to the crossing moving averages. The 21 is actually crossing over the 50-day right now. That's a lagging indicator, but it is showing the bullish trend here that's happening in that shorter time frame. If that doesn't hold, of course, obviously at this point we would negate an RS flip at 45K. We would then look to the next moving average. That's about 15%. Then I would look to the low of that range, which gets us closer to the 20% mark. And if that doesn't hold, again, I'm just using these key levels as technical support levels. And of course, the next move for me would be, the 30s. There's a lot at 33. I've got that marked up on another chart. We can look at that another time. Got a lot to get through today. And the prior low was around 24,750. That's a 50% retrace. That's a huge move. And while many are calling for that, it's getting, in my opinion, less and less likely that we're going to see something like that because of the ETF inflows and because of the manipulation we've been seeing in the chart. And we saw it last week, starting on Tuesday. We saw a big block of liquidity come in here, push price up. It had no intention of getting filled. When price kind of peaked here and they saw it was coming back down, they added another block down here. These were essentially the same size blocks. And it didn't have the effect that they wanted. So they pulled it. The next day, this was Wednesday, they put another block here, price part, it started to move. And instead of putting another one down low, because that was not effective, they put another one up above, they stair-stepped up, and that pushed price. And we saw that continue to happen. Push price. And then over the weekend, actually, this block had come down from, you can't see it on this chart, but this block had come down from this, well, you could see part of it, come down from this 35 to 38K level. Actually, this, I think, was more in the 37 to 38K level. That was about $37 million, if I remember correctly. That moved into place and it moved out over the weekend. That tells me that this might be an institutional ladder. Those guys are playing the game during normal TradFi business hours. They pulled that over the weekend, and Spoofy the Whale went back to doing his thing, spoofed a block here, pushed it back up to this level, and then back down to 42. These were this 42K level. He's been all over this level right here. So I don't expect, if price goes to these levels, I don't expect these spoofy blocks of bids to hold, to be honest with you. So be mindful of that for sure. Back to the charts, we have identified where we think price could go here. Of course, price could go up. And some factors that are coming into play this weekend, number one, we have more ETF sales coming as the market opens in less than a couple hours from here. And we have a pretty busy economic calendar this week, starting tomorrow with core inflation numbers, moving into Wednesday. We'll start to see some PPI numbers. Thursday, we've got continuing jobless claims. And on Friday, again, core PPI, housing, all these things have, and PPI, all these things have an impact on price action because of the Fed outlook and when the market anticipates that that cuts might begin. So those are all things that we're watching, and of course, we're watching the order book here. I want to see, as you can see, things started breaking down at this point after peaking yesterday around 48.8. Things broke down, and now we're just starting to see a little bit of buying here. We need to see this happen with volume, of course, but really, I will be watching to see where, if we actually get that retest of support and where it happens, because in my opinion, that's how you build strength in the chart. These celery stick candles tend to not age well. Oops, sorry about that. These celery sticks tend to not age very well. So I want to see, I really want to see some foundational support being established in the chart. If we're going to see an RS flip, where's it going to happen? Is it going to happen around this 45K level? We see a little bit more support coming in at 45.5. That's kind of to protect that. This would be good. In my opinion, this would probably be the most bullish scenario. Up here, this was just such a big move. I think that as we talked about the structures that are forming, I've taken them away now, but I want to see a retest. I want to see a retest to confirm an RS flip and give us some foundational support to take the next leg up. ETF inflows, of course, have been outpacing outflows over the past 10 days or so, business days, I should say. So that's certainly a factor that could really throw a wrench into the downside potential because, with that much volume coming in, it could just continue to push price. Do I think it's healthy? Not necessarily. I don't. Like I said, I want to see the healthy pullback to reestablish or establish an RS flip. But we're in a, let's face it, it's a new era. So this whole ETF thing is new to the market, and we're going to have to see how things progress from here. Hope that gives you some insight into how you can view the charts this week and what you should be looking for. Nothing that I share in these analysis should be considered trading advice of any way, shape, or form. Please do your own research. Trading is risky, and in this market, it's getting riskier and harder to trade. No doubt about that. Look, again here, that's a spoof. So these guys are moving liquidity around to try and trigger algos and push price up. Be mindful of all of that happening. We're going to be watching again to see where support actually establishes here. If you like the analysis, please do me a favor, comment, like it, and share it. I appreciate all the support that you guys are giving me. I love the comments, and I try and respond to each and every one of them. Hope you have now a decent perspective to face this week of price action. And as always, make it a great day and trade safe, my friends.